Now the Bank of Namibia has released its selected monthly statistics for September, with total Namibian debt growing by 0.94%, representing a yearly growth rate of 10.4%. For more now, I'm joined by Daniel Kavisha. He's an analyst at Simonis Storm Securities. Daniel, thank you so much for making the time to join us. Let's get right into it and look at the total debt to GDP ratio. What does that tell us about the state of the fiscus?
Good day, Nodzibo. I think if we look at the total debt numbers, we found that they've moderated over the past couple of months, ranging between at least 65 to 85%. I think at this particular stage, it's nothing to be particularly worried about because it's similar to current debt levels in other emerging markets. If we look more specifically at the public debt to GDP ratio, we find that it's at about 22%, ranging to 25% earlier this year. And this too is in line with expectations from emerging markets like in South Africa and Botswana. Within Namibia, the government made a stance to make sure that this ratio always stays between less than 35%, and I think they've managed to maintain that quite well.
Of course, Daniel, as you've noted that there's that benchmark the government has set of 35%, and we've seen government debt in particular almost stabilizing since 2012. Are you expecting this trend to be sustained?
Yes, I do expect it to be sustained. There will probably be some slight increments if you look at your more long-term debt as opposed to your short-term treasury bills, which have decreased over the past couple of months. This is in line with the fact that this year we had a drought in which the government has to try and service in some particular way. And of course, tax tends to be more of an unpopular option as opposed to debt. And then also looking forward to the years to come, we find that elections are coming up and the government has become a bit more aggressive when it comes to reducing backlog in housing and also to ensure that it can meet its NDP4 goals. So I expect the years to come to see definite increase in debt issuance.
Let's look at government debt issuance from a different angle. I mean, on the one hand, you have noted that the elections are coming up in 2014 and likely we're going to see government spending there. But over and above the elections, where is the government aligning these funds to?
If you look at the country right now, we have certain sectors which are booming, manufacturing, construction, fishing, which is sort of linked to agriculture as well. These seem to be the main areas where the government is going to be focusing most of expenditure for the next coming years. Like I mentioned earlier, this is in line with its initial plan of NDP4, which is an interim goal to its outlook for Vision 2030. For a sustained growth and an industrialized country by that period.
Daniel, let's look at private sector credit extension. Almost a trend that's going in both ways. We're seeing a month-on-month increase, but if we compare the year-on-year figures, we're seeing that private sector extension, credit extension, is actually declining. Can you give us some insights on what exactly is happening here and what does this say about the state of the economy?
If you compare the numbers that we have this year as opposed to last year, we realize last year the growth was much higher. So the year-on-year numbers are basically a reflection of the fact that last year we had a monetary base as opposed to this year. That's why the numbers seem to be coming out a bit lower when you look at year-on-year numbers. It's not necessarily an indication of subdued growth in this particular sector. We see that private companies and private individuals are still taking out debt to meet several needs. One particular area we've noted that has been growing installment credit, which has been on the benchmark of the fact that individuals have found that spending on cars and buying of vehicles during this period seems to be most sustainable, as opposed to mortgages, which used to be the main reason for growth in previous years. Another thing which you also have to factor in is that currently Namibia has extremely low interest rates. Repo rate stands at 5.5, and this always instigates growth for both individuals and for corporations to take on debt.